afternoon and welcome. I'm Linda Green, Realtor, covering the Fort Washington National Harbor area, and I'm going to be joined this afternoon by Carl Felton, mortgage lender with NEXA Mortgage. Good afternoon, Carl.
Good afternoon, Linda. How's it going today?
Pretty good, pretty good. How are you?
I'm doing great. It's a cloudy day, but I still feel pretty good. I'm very upbeat and everything's going well today.
Good, good. And it's chilly. I'm a South Carolina
Yeah,
girl and I don't particularly care for the cold weather, so it's a little chilly here.
it sure is. I forgot about that part.
Yes, it is damp and chilly. So, Carl, let's talk a little bit about being a mortgage lender and how you decided to be a mortgage lender.
Great. Um, well, initially, I majored in finance in college, and I knew I wanted a job that was kind of connected to what was going on in society as far as interest rates and talking about what's happening in the economy and things like that.
Money.
So, yeah, money. Yeah, I wanted to have a job that dealt with money, but not just like dealing with money where you're at a desk somewhere adding up numbers and doing accounting work. I wanted to kind of be really in the thick of things where when you cut on your TV, that kind of affected my job, and just to have that real relevance. So early on, I had a couple of jobs in the financial field, um, and my first real important job was as a savings and loan examiner with the Federal Home Loan Bank Board. And with that job, it had different phases to it or facets. Um, a person would examine the financial operations, looking at the general ledger, balance sheet, income statement, that sort of thing, some of the transactions, uh, looking at policy and procedure. Someone else would look at their lending and look at their lending portfolio. Someone else would do another phase of it, maybe looking at management practices, things like that. And I had that job for a few years. It was a great job. And I enjoyed the part of the job that dealt with reviewing the loans and the lending, looking at the lending policies, procedures, and I had a chance to look at both residential and commercial lending. Through that, when I left that position, I worked directly for a savings and loan on Wisconsin Avenue, and worked for them in their construction loan department. And I was a construction loan underwriter, not underwriting from a standpoint of approving loans, but going out, getting business, talking to builders, things like that. I don't know why that position was called underwriter, but anyway, and I prepared reports that the loan committee reviewed and things like that. After I left that position, then I worked kind of on the insurance and financial services side for a few years. And then 27 years ago, I got into the mortgage business.
Age now. Well, don't let me talk for me. Tell your age.
Yeah, because I already talked about a career prior to that. Then I say still 27 years ago is when I started doing what I'm doing now. So the good thing about it, yeah, my career kind of started right off as far as, being a bank examiner and all that. I was like 23 years old. And so I got a lot of great experience early on. So when I became a loan officer 27 years ago, that's when I started doing loans with individuals and getting involved that way. And I started off the bat doing residential and commercial.
Okay.
So that's how I got started.
You're pretty well rounded, it sounds like, in the mortgage industry, whether it's residential or commercials, like you've got it
Yes,
all covered there.
that's right. I
So,
sure do.
having that much experience, tell me about one of your most memorable experiences you've had in those 27 plus years.
Um, actually, I had written down some answers to your questions, and what I wrote down, I think the first thing I'm going to share is not even what I wrote down.
Okay.
During that time period, that first time working with the first company, and I did my first commercial loan. I met a guy that owned a restaurant on way out Central Avenue, past PG County. I guess right when you get into the next county, and he owned a restaurant, and I got him a loan. Um, refinancing and I think getting cash out of that restaurant. And so that was a great experience. And so met him, um, and he was a nice guy, and would meet him at the restaurant also too. Believe, yeah, went over to his house and we signed some documents and things like that along the way, before closing. So I think that was a great experience, meeting that gentleman who owned the restaurant.
Okay. And what was really memorable about it? It was just the
Just the fact that I was meeting a business owner and getting a loan for a business owner
I
of
see.
a certain amount, and just that experience, because normally you don't meet restaurant owners and things, and we rode around looking at some other houses. He wanted to get another loan after that, and we rode around looking at a project, new construction that he wanted to buy a house, and so
Okay.
it was like a real good connection of meeting a great person that was successful, and we just kind of took to each other, and that was a great situation.
Cool, cool. So, in terms of oddities or just strange requests that you may have had from clients, what,
You know, I looked at that question a few times, and I have to say, it's going to sound strange. I really have never had an odd request.
really?
Yeah,
Oh,
I think part of it, for the most part, is me being a lender. The saying is, "He who has the gold makes the rules." And I
okay.
think because I'm in that posture, then I'm the person. If anybody's going to do any requesting, it's going to be me,
Okay.
versus a borrower. Now, borrowers ask about interest rates, types of loans, things like that, but nobody's really made a odd request in all these years.
No.
Everything is always either dealt with loan type, interest rate, um, things like that. But outside of that, I really couldn't think of anything.
Oh, okay. Okay. I know back in the my younger days in dealing in real estate and working for like a builder, I would sometimes get that, well, in terms of my income, I do hair or I do cars or, I that kind
Right.
of thing. And then
Yeah.
trying to prove that they had those additional funds to close, I found to be kind of odd and interesting that people would think. But I guess in the climate we're in now, we don't have much of that, and I guess that's a really good thing because in that era we had lots of problems with mortgages, and I'm sure you remember that.
Yeah, we definitely did. Now, along that line, I did have a gentleman a couple of years ago, no more than 24 months ago, that his main job, primary job, was to train um, children in tumbling and gymnastics,
Okay.
but he was he wasn't getting paid with the W-2 salary. It was 1099, and I was explaining that, well, since you're getting paid 1099, we have to look at your tax returns, that sort of thing. And he didn't have all of his ducks in a row and couldn't understand because he was making a pretty good amount of money, but he didn't understand why he couldn't get a loan just as everything was without a huge down payment and all of that. So, and I
Right.
was explaining that, well, when your taxes are prepared, um, that's the income, but then there's expenses, and then we look at the bottom line and things like that. So but that really wasn't an odd request, but it kind of tied into what you're saying about sometimes people do hair or they have some other kind of jobs that are not necessarily mainstream, and because of that, that really does affect whether or not to qualify or not.
Right, right. Would you say that's one of the greatest challenges in doing loans would be someone that's a 1099 or has, as opposed to having a W-2, or what might be another one of the challenges that you've run across?
Yes, that's a huge challenge because most persons that are self-employed or get paid 1099 income, it boils down to their tax returns, and most people write off a lot on their income.
Hmm.
Very few. I've had some clients, but not many. And the client that I can think of that was able to still get a loan. It was a refinance. It wasn't a purchase, so they didn't have to put a lot of money down. It was just taking money out of some properties, but they had their taxes prepared in a way that the income was sufficient to qualify. But 9 times out of 10, unfortunately, very few people have a significant amount of net income that would allow them to purchase a home. There's other programs that we have to compensate for that, be it a bank statement program where we'll look at your deposits on a monthly basis. And if you're depositing 10,000 a month or something like that, then we count that as 120,000 a year. Whereas on the tax return, it wouldn't reflect that. So there's other things that can be done for a self-employed person, but it's a little more challenging.
Oh, okay. In terms of the industry, how have you seen it change over the years?
It's changed tremendously. Matter of fact, when I first got started with that first company, we would write out, we would go on appointments in the client's home.
Uh-huh.
And so, with that particular company, we worked by, they had a telemarketing division, and us as loan officers, we ran leads, meaning that they would give me a lead and say, Carl, there's a person that lives over in DC and Northeast. I set up an appointment for 2 o'clock, and I'll go out there. But we would write good faith estimates on a form, but we would do it by hand. And so we learned how to do good faith estimates on the spot and that sort of thing. These days, you don't do it that way. It's done, in the computer.
Right.
Um, Also, believe it or not, um, credit reports years ago didn't have credit scores, didn't have FICO scores. What you saw was a person's credit history, and if they had a certain number of lates, like a revolving account was called a R. So you had R-1, R-2. R-1 was paid within 30 days, R-2 was 60 days.
I remember my credit report looking like that.
That's right, you had those R's.
It doesn't look
So
like that anymore. Or it does, but there's a school.
right. So based on the number of, we looked at the number of lates within a 12 or 24-month period.
Mhm.
I-1, I-2, I stood for installment. That's your car loans, consumer loans, things like that. And so as loan officers, we looked at the history within the last 12, 24 months. Um, if it really was just, if you had just a whole slew of R9s, that was the worst, then we knew, off the bat that we can't do anything.
Sorry, Charlie.
Um, we're sorry, Charlie, that's right. And so, but when you get to your R1s, your R2s, just depending on the time and when those lates were, that would be a loan that we would pull together, submit the package to underwriting, and that underwriter would have to look at that in concert with the guidelines and make a decision as to was it a good loan or not. Now, we did a lot of letter writing back then because we had to paint the picture of quote unquote, here's what happened last year or 6 months ago. I was on vacation, I didn't get my mail, or this or that happened, I missed a payment, whatever the situation was, but it was more of a painting the picture to show a before and after.
Okay.
Here's what happened before, but everything's all right now, and I'm in position now to get a loan, and I'm going to do a great, I'm going to pay as agreed. I'm a great borrower. I'm a great risk.
So there's no
Um,
letter writing anymore to explain any.
we still letter write now, but not with the magnitude and the importance, I would say, that we did back then. Back then, we were trying to sell that loan to be approved or not.
Mhm.
Now, letters are written just to explain uh, maybe a late, but just to explain maybe um, something about a job, why you had two different pay stubs or two different W-2s for the same company under different names or something like that.
Mhm.
Just more clarification.
I see. I see.
But those old letters we were selling.
Mm. Okay. You have to put your skills to work, huh?
You
Write
put
a
your skills
novel.
to work.
Write a
That's
novel
right.
if need be. So I read an article, actually it was yesterday, that talked about research that was done with with teenagers, and that report said that at least 80, I think more than 85% of them wanted to own a home at some point in time. So what would you say to a young person? What do they need to do to prepare to buy a home? What advice would you give them?
I would say, just like we were talking earlier, we talked about salaried income versus being self-employed. I think starting out would be good to have a good salary. And so whatever a young person, whatever it took to enter into a certain field, whether it's through going to trade school or going to college or something like that. Whatever prepared them. Maybe it's getting a associate's degree in a certain field
Mhm.
and getting that 2-year certificate or 2-year diploma to get a salaried position because it's just easier to qualify a person with a salary than not. But on top of that, I would say save your money. Definitely save money. Don't spend every dollar that they make and pay close attention to paying their debts on time because credit is king and cash is king. So um, when we were in college, companies or banks would give us credit cards.
Oh my.
I remember being on campus one of those years, and Bank of Virginia, they're not around anymore, but Bank of Virginia was sitting at a table, and you would just come and sign up. I don't even think they ran your credit or anything, but they were
Oh, I
just giving
remember.
you
I
a
remember
credit
those
card.
days. My first American Express card. I'm like, I just barely got out of school, and then
Right.
I got an American Express card. Like, don't leave home without it.
Exactly. So, I
Yeah.
mean, it's okay to have credit, but a person has to learn, what they call it these days, financial literacy. And
Yes.
so you have to learn how to manage credit. So I would suggest it's okay to have credit, to have a credit card, but to keep the balance below 50% of the credit limit. So
Mhm.
if a credit limit is $600, keep your balance at $300 or less. Don't have the $600 credit limit and your balance is 550 and 580 or 610, those kind of things. And
Right.
please don't be late. Don't. And,
Exactly.
same thing with rent. Have a good rental history if you're renting an apartment or something like that, because we're going to look at the rental history. We're going to look at the credit report to see if there are any lates, that sort of thing. And these days, since credit is scored, what's reported to the credit bureau, it's going to be based on their payment history. So I would say save your money, get a salary position, pay your debts on time, and live below your means.
Right. Well, what about those kids, those young adults that are kids that they're just determined to be an entrepreneur?
Mhm.
I think that goes back to being the 1099 person or running your own business and actually filing your taxes and not taking everything as a um, a-
Expense.
as an expense so that you can show that you actually have an income. And
Yeah.
yeah, okay.
I would say, and I have 3 nephews that they're teenagers, still in high school, and their mindset is they don't wanna work for anybody. They already know that already.
Hmm.
And one of them, actually has a business now where you can buy slippers from him. You can buy slippers online from him. He already has a well, my sister he's paying for it, but she helped him to get it. But this guy, he's a high school senior, has a car, has a business. He's paying for his own auto insurance and his car note, and it's a
Okay.
very nice car, like a 2019. I
Oh,
mean, not the hand-me-down that you got from your parents or whatever, or a car you got for $1,500.
right.
He's got a bona fide car note that me as an adult, I would drive the car that he has as well.
Oh my.
And so I say that so a person like him and other young persons, we can kind of work on the end up front. If we know that they want to buy a home, okay, well, here's how you're going to have to do it as a self-employed person, and then they can kind of begin to start that way and get the taxes prepared that way, start saving a certain amount of money, that sort of thing. So as long as we start up front, then it can even be done with an entrepreneur. But I find that most of the time, persons want to buy a house, but they've been in business however number of years, but for all those years they've been doing it to minimize a tax liability, but not to be able to qualify for a home.
Got you. Got you. Got you. So, in terms of pet peeves, do you have any?
I do.
Okay.
My biggest pet peeve is, let's say there's a holiday weekend, and okay, so you talk to a borrower on a Friday afternoon. Here's the status of your loan. Monday's a holiday. Okay, you have your weekend. Monday's a holiday, so everybody's off. Our lenders off, underwriters are off. But I may get a phone call on Tuesday morning at 9 or 10 o'clock. What's this? I'm calling to get the status of my loan. Your loan status hasn't changed since Friday because no one's been at work since Friday. So everything's still the same right now. Maybe later in the day or tomorrow, we may have a little bit more information.
Mhm.
So that's a pet peeve for me because, you know, business hasn't been open over the holiday.
Yes, yes. I know as a real estate agent, I don't know if I call this is this a pet peeve for me? It's you have someone who's buying and I say to them all the time, okay, don't create any more expenses.
Right.
And they get excited about buying this house and it's the Labor Day weekend or Memorial Day weekend and everybody's having a sale and so they think, oh, my new house. I need, and then they go out and they buy furniture. They buy something that dings their credit score. And it's like,
Right.
but I asked you not to incur any more debt.
Right.
Would you consider that a pet peeve? I mean, it's mine.
Sure.
Yeah.
Yes, because you would, we want our borrowers to listen to us. Um, and because what we're going to suggest is very important because this is what we do every day.
Hmm. Hmm.
So yeah, that can be definitely be a pet peeve.
Okay, okay. Sounds like you love what you do. Do you ever just get like down and need to be picked up and motivated to continue to do what you're doing, or every day you jump up and you're ready to hit that computer and yeah, you're ready to go
This is
for
gonna this is gonna sound strange, but I really don't have to be picked up. I mean, there's been times that you have that I've talked to you on the phone, but I've been out of town. I've been on vacation.
it?
So
Hmm.
and I've talked to you about a client, about marketing or whatever, just like I'm home.
Hmm.
And so yeah, I do love what I do. Um I What I do to stay motivated though is well, part of that love is that I like to help people to achieve their goals. So if someone has a goal of taking a certain amount of money out of their home for a refinance because they want to fix their basement or update their home, you know, I like being a part of that. I like being a part of someone buying not only their first house, but maybe the move up house.
Right.
You know, now they're in a bigger house, what we call a luxury home, that sort of thing. And I think part of my mindset is that listen to a lot of motivational talks and read motivational books, things like that. So I think that helps to kind of keep me have a certain mindset.
Okay. Okay. So, uh, if what makes you is there I'm sure there's something. I mean, I chose you as my mortgage lender, but in your opinion, what makes you different from other mortgage lenders, or would you say would be your come see Carl?
Yeah.
You can brag on yourself, Carl. It's okay.
Yeah. I think I think I think it's very rare to find someone as well-rounded as me. So I'm very personable. I can talk about almost anything, although, as a loan officer, we're going to do a transaction. I'm going to get you a loan, that sort of thing. But not only am I very knowledgeable, I'm very educated. I'm very knowledgeable. I have a lot of experience. I'm very accessible. I'm not hard to reach. And I don't really work set hours. I don't work 9 to 5.
Right, like you said, I
You know,
call. You can call. You're on vacation. You're hanging out at the beach. You're
right?
off skiing somewhere, but you pick up your phone. So, what do you do for fun
What I
besides
do for fun,
besides answer my phone calls while you're on vacation?
what I do for fun, I like to travel, go out of town and visit new places, and I like to spend time with my immediate family, as far as like my wife, my children. Uh, I just had a new grandchild last week, and so
Congratulations.
I have a new
Yeah.
granddaughter. So I like spending time with family and friends. And believe it or not, I don't think you know this, but weekly I go to line dance class.
No, really? I love
Yeah,
listen, I love line dancing. I don't know the
yeah,
latest one because I haven't been out, with a whole lot of personal stuff going on lately.
right.
And my line dancing buddies, the two of them have passed away. I'm sorry to say. So When I'm at like I had a friend who celebrated his 80th birthday, and they played the old line dance song. I was out there doing it,
Right.
but now they've got
Yeah,
new ones that I'm not, I don't know about. So I might have to check that out, Carl.
I have to invite you to class. So we can definitely talk about that.
Okay, all righty.
Um, so I do that. I'm also a musician, so I play the trumpet, and I've been playing the trumpet since I was 10 years old.
Oh,
And so I've played in different bands and things. I've been playing in bands. I first started playing in bands when I was 11 years old,
I
and
love
that's back playing Cool in the Gang and
huh?
Ohio Players, Mandrill,
Get
Earth, Wind
out
and
of here.
Fire. And I
Okay.
played in college too. I was for the most part first trumpet in a lot of the different ensembles. I played the concert band, jazz band, um, and we had like a brass ensemble playing like the classical music, things like that. So I've continued to play over the years. Matter of fact, my son is a trumpet player too, and he minored in trumpet performance in college. And also I kind of play around with the guitar too.
Oh, excellent. Yeah, I
Yeah.
tried to do that when I just pulled my guitar out of storage.
Okay.
I got one when I was in the seventh or eighth grade. My mom bought me
Wow.
an acoustic guitar. And
Yeah.
I'm a huge music lover, so it's interesting that I didn't know that about you. And I've been in choirs all my life, so yeah, interesting.
Same.
Well,
Same here.
yeah. Thank you so much for taking the time to talk with me today. And you guys, don't forget Carl Felton with NEXA Mortgage. And Carl, I'll talk to you soon.
Excellent. I really enjoyed it.
I
This
enjoyed
has
it.
been fantastic.
Thank you
Have a
so
great day.
much. Yeah.
Thanks.
Bye bye.
Bye bye.